A fever broke in the tech sector this morning, but not from illness. The data is screaming that something fundamental shifted beneath the surface of those earnings numbers we've been watching all week. What's cooking under the hood? Speculative appetite has no pulse today. It's running hot with precision. ARKK, SPHB, MAGS, XY and XBI are all advancing ARKK, suggesting smart money isn't fleeing risk. They're selectively hunting for exposure where fundamentals justify premium pricing. The data confirms what headlines whisper. Capital is rotating into quality growth names that can defend against inflation while still delivering upside. The circulatory system is stable but contracting. *high, HYG and HYGW are barely moving, with yields tightening just enough to signal confidence without complacency. This isn't a sprint, it's the market breathing easier after weeks of holding its breath. Credit spreads aren't widening like they did during last month's scare, meaning institutional stress has eased significantly. Temperature is dropping fast. UVXY, VIXY, and VXX are all cooling, with UVXY shedding 3.38% as traders stopped hedging their downside exposure. The fear index, VXLF, dropped to 15.84, not a crash signal, but enough to tell us the panic phase has transitioned into controlled volatility. The market's immune response is working. Fear isn't gone, it's been contained. Here's where the story gets interesting. *SMH surged 2.14%. IYT led all sectors at plus 3.17%, and small-cap engines, IWM, KRE, followed suit. When semiconductor equipment and industrial tech lead while consumer staples retreat, 1.99, it means the real economy is humming. Manufacturing demand, capital investment, and infrastructure spending are all moving in unison with corporate earnings. Gold jumped plus 1.23% as a hedge against geopolitical noise from the Iran Fed corridor. TLT stayed nearly flat while bond modestly advanced, indicating investors aren't fleeing to safety. They're positioning within safety for steady growth. The data shows this isn't a defensive retreat. It's a tactical rotation. The hero portfolio doesn't need more protection today. It needs precisionist. The villain, volatility plus inflation uncertainty, is still active, but its weapon of choice has shifted from chaos to selective weakness. Tech earnings are validating quality over quantity, and that's creating a new equilibrium where growth outperforms defense, unless geopolitical shocks spike oil again. The Canary dashboard shows the market has completed its fever cycle. Inflammation is down, immune response is active, and recovery signals are strengthening. The next question isn't whether to hold, it's where to deploy the cash that's been sitting on the sidelines. Watch the tech earnings cascade tomorrow. If they crack, gold will lead again. If they hold, we're entering a sustained bull phase. The canary is singing, and today the song is steady.